Hello, today is March 21st, 2021, and today is the day that I'm going to carry out my first ever trade on my new trading platform. Now, of course, I have absolutely no idea what I'm doing. I've never analyzed the company professionally, and I don't really know how to do that anyway. I've never read a balance sheet or anything like this. So, yeah, it might not be a great idea for me to participate in this sort of investing environment anyway, but here we are. And so, my strategy is to try to anticipate what the market is going to do next, sort of get a feel for the market psychology, understand what everybody is talking about, and then try to distill from this an investment strategy and try to sort of get ahead of the market or just ride the wave along with everybody else. I'm sure there's a name for this sort of investment strategy. I don't know it, but that's my idea. So I've been reading the news. I've watched some investment channels like Bloomberg or Yahoo Finance and stuff like this, and I'm trying to get a feel for what everybody is thinking at the moment. Okay, so based on my quote unquote research, which again really is just watching the investment channels a little bit and reading the news, um, I would say that even though there are a lot of interesting news items, I don't know, shipping costs are going up and there's a global microchip shortage. The number one item, the single most important thing that's on everybody's mind that all the investors are talking about is higher interest rates. And in particular, they use the 10-year US Treasury bond as sort of a barometer of where interest rates are and where they're going.
Take a look at rates. The 10-year at 173. It's the high. It was higher than that. It's the highest level in more than a year. So the trend continues.
Rates should be rising. And if we're expecting an economic expansion, we're expecting a resurgence of demand, rates should go up.
So then you could ask, what's the reason for those higher interest rates? And I believe most investors would say it has something to do with all the higher debts and deficits around the world. Famously, the Biden administration just passed this $1.9 trillion stimulus plan.
Right now, President Biden is set to sign his landmark $1.9 trillion COVID relief bill. You see the president there in the Oval Office.
What I'm going to do is sign this bill. Got it. Thank you all. Appreciate it.
Really, it's all around the world that we're spending a lot of money because of the pandemic and support businesses and just support furloughed people and so on. So that costs a lot of money, increases deficits, and so you need to sell all your debt, right? So you have a lot more supply of debt instruments, but there aren't there aren't more buyers for them. And so if you say, all right, let me buy this 10-year treasury bond or something, then I need to have a higher interest rate to be compensated for it. And then another problem is that what people think might happen, or maybe is already happening, is that all the money that people are getting is just going to be spent, and that increases prices. So there will be higher inflation, or at least there is sort of an expectation for higher inflation. And again, that then causes interest rates to go up. And you can see this already in all kinds of commodities, in soybeans and in coffee and in lumber prices. So that means it's going to cost you more to buy your morning coffee at Starbucks, and it's going to cost you more to buy a house because it's going to be more expensive to build it, or everything that depends on soybeans and meat and so on. All of this, so food might become more expensive. So all of this then pushes up interest rates. And I think this sort of simple picture here summarizes quite well the current market psychology, or sort of the picture that people who are investing in the stock market have at the moment.
We've now had a very significant move in 10-year Treasury yields from about 0.75% 4 months ago to 1.75% now. That's a very big move.
Okay, so if we accept this general picture and we say that we now have higher interest rates and that interest rates are going to keep climbing, then one can ask, what sectors of the economy is this good for? And one very common answer that I've heard is that high interest rates are great for financials, banks, and so on. Of course, the idea is just higher interest rates means higher earnings for banks, because when they make a loan, they can loan it out for higher interest. Okay, but there's of course a lot of risk. So For one, I'm not so sure it's really as simple as this. I suppose it depends on what the bank actually does. Also, if interest rates go really high, that could actually crash the stock market, and I assume that would be bad for banks. I don't know. And also, I mean, this has been going on for a while, so maybe all of the upside that comes from higher interest rates is already priced into the banks and into the financials. And so then those stocks wouldn't really have a lot of room left to run. But my idea is I would probably agree with this, and if interest rates go higher, which I think is likely, then financials should do well.
This is great for banks. It is not great for a lot of other stocks.
So that brings me to my first idea for an investment, and that is Deutsche Bank. So that would be a financial company, a bank playing on this idea that higher interest rates might be good for financials. Now, Deutsche Bank is probably not a great company, quite problematic. It once wanted to be a global player, and it was worth a lot of money before the global financial crisis, when the stock was worth more than 90 euros, and it since then has just declined and kept declining and declining. And there isn't a single scandal you could think of in the financial world that Deutsche Bank wasn't a part of. You know, the LIBOR scandal a couple of years ago, and it's the bank of Donald Trump, who has a lot of negatives. So, you know, it is sort of a scandalous bank, a problematic company. But recently, I think there has been a lot of positive sentiment around this company. So if you just look for a couple of news stories about Deutsche Bank, they're all quite positive. So for instance, some news headlines read, Deutsche writes result optimism with blowout trade. Back from the brink, Deutsche Bank improves outlook, and Deutsche Bank swings to annual profit, beating expectations. So I'm just going to look for some news articles about Deutsche Bank on Google, see what sorts of news people report on this company at the moment. Okay, so let's just type in Deutsche Bank stock news, and let's see what comes up. All right, so here we have Deutsche Bank investment bank revenue to swell by 20%. Deutsche boosts bonuses by 46% on return to profit. Typical, you know, the moment they make some money, they just pay it out in bonuses. Oh man. Deutsche Bank writes SPAC boom. MasterCard and Deutsche Bank deepen collaborations. Deutsche Bank's outlook upgraded to positive by S&P. Fitch revises Deutsche Bank's outlook to positive. Trading boom propels Deutsche Bank to first profit in 6 years, and so on and so forth. So, you know, on the whole, the news reporting, the news coverage for Deutsche Bank is quite positive. And therefore, my investment idea for Deutsche Bank would be that after years of losses, they have finally cut the corner, they have successfully restructured, they have learned their lesson, and they're now going to return to profitability. And if that is true, then their stock price should go up quite a bit. So I would try to get ahead of the market before their next earnings report, buy the stock now, and then hopefully when people see, oh yeah, the bank is actually profitable again, that's when the stock price could soar. Okay, so at the moment, the stock price is about 10 euros and 60 cents. Their last earnings report in February was very good. People expected a loss, but they actually made a profit, a very small profit, just about 50 million euros, but a profit nonetheless. If I was a professional investor, I would probably at this stage look at some metrics, some numbers, but I have no idea about those yet. All I know is that they did not pay a dividend last year, which is a shame. Usually financial institutions pay a dividend, and I think Deutsche Bank historically has paid a dividend, but not during the pandemic. Okay, so my quote-unquote prediction for the short to medium term, say for June 20th, would be that when they report earnings again, I couldn't really find out when, but let's maybe say around April or May, they will beat expectations again and announce another profit. It doesn't really have to be a very big profit, let's just say another 50 million euros or even more than that. And that would show the markets that Deutsche Bank is more sustainable again, that they can actually make a profit twice in a row, and that they might be back into profit territory. And that should propel the stock higher. Maybe they will even announce a small dividend, which should make the stock even more attractive. And then if they're really smart, they go onto all the news channels and get some media coverage and pump up the stock even more like that. So I think by the end of June, the stock in this sort of ideal scenario could go up to maybe 15 euros a share, which would be a phenomenal gain of about 40%, which is really great. Now, of course, this isn't really a prediction as much as it is a best case scenario, but I think it's important to have some sort of a optimistic vision in your head, a positive story that you can spin, because if you can't even have a positive outlook or a best case scenario for a company, then what are the odds that this could work out at all? So my first idea would be to buy Deutsche Bank right now for about 10 euros and sell it in about 3 months for about 15 euros. Of course, it's widely optimistic and very, very risky, but that's my first investment idea. Okay, the second big story that everybody's talking about as a consequence of higher interest rates is that people are restructuring their portfolios from growth stocks to value stocks. Growth stocks are, all the stocks that were really hot for your stay home story, your Zooms and your Pelotons and your video games and your, delivery companies, stuff like this. And now they're going back to more traditional, more defensive stocks, classic stocks in mature, established sectors, and stocks that sort of pay a dividend.
I'm going to take you to the wall first and foremost, show you where the markets are trading. Yes, the Dow hits another new high today. It's those tech stocks, though, that remain under big-time pressure.
Markets tumbled yesterday as the 10-year Treasury yield hit a one-year high. Big tech got slammed. Microsoft lost more than 2%. You're maybe recommending a slight shift away from growth and some of the leaders that we've seen in the stay-at-home sector. Now are you now recommending value or cyclicals or something?
Now, I think there is a more technical definition of value stocks, but I don't really understand all these metrics yet, so I'm going with this much more intuitive definition. So here's a website I found that explains quite nicely, I think, the difference between growth and value stocks. But yeah, it can get quite technical and I don't really fully understand it yet. It lists a couple of important metrics like the price to earnings ratio, the debt to equity ratio, share price versus tangible book value, and so on, and then explains under what conditions it's a value stock. For instance, if the price to earnings ratio is in the bottom 10% of all company stock, it is undervalued. Or tangible book value is the value of a share reported on a business last balance sheet. If a stock share price is below tangible book value, the stock might be undervalued. And so even though it sort of makes sense, I don't really fully understand it yet. Maybe in the future I can learn more about these values or these metrics. But right now I'm just going with my gut feeling and see if I can find a company that might qualify as a value stock. Okay, so I looked around a bit for different companies and I found one that perhaps maybe might be a value stock. I don't really know, but it could be. And that company is GlaxoSmithKline, GSK. They're a pharmaceutical company here in the UK, so they work in the healthcare sector and they're one of the largest medical companies in the UK. I got this short profile description from a website called MarketBeat. And they describe the company as follows. GlaxoSmithKline engages in the creation, discovery, development, manufacture, and marketing of pharmaceutical products. The company offers pharmaceutical products comprising medicines in the therapeutic areas such as respiratory, HIV, immunoinflammation, oncology, antiviral, central nervous system, cardiovascular and urogenital, metabolic, antibacterial, and dermatology. It also provides consumer healthcare products in wellness, oral health, nutrition, and skin health categories. So a very solid, very traditional, very defensive stock, very good company, but it hasn't performed very well. So it hit a high of about $48 just before the pandemic hit in 2020, and then like everything else, it declined a lot. But unlike many other stocks, it hasn't really gone up very much again, and it is still today very near its lows. So that's why perhaps it could be a value stock, maybe. At the moment, the current stock price is $36.63. And like typical mature companies, they have very solid earnings. They earn about $3 per share for a total net income of $5 billion. So it's huge, in my opinion. I think that's a lot of money. But again, typical, I think, of more mature companies. Again, if I was a more professional investor, I would probably look at a couple of metrics at this point, their price to earnings ratio and their debt levels and stuff like this. I didn't do anything like that because I don't know about it yet. So I checked for certain news items and I couldn't find anything super negative that would explain why the stock has performed so poorly. But, and this is really cool, it is one of the largest dividend paying companies in the UK, one of the largest outside of the finance or telecom sectors, which traditionally pay very large dividends. And this stock pays a whopping dividend of 6.8%, which is very, very large and which I think is really nice. So my prediction again for the medium to short term for the next 3 months would be that they come out with another earnings report, I think in May, and it's just another good solid report reporting good earnings, and then lots of investors will want to buy a stock like this because they think it's undervalued and it's part of this restructuring from growth stocks to value stocks. And so I think in the near term, this stock could go back up to its traditional high of about $45 a share. And that would be an increase of a good 20%. So this is a lot less risky, I think, than my Deutsche Bank idea, because even if it doesn't pan out like this and the stock sort of keeps declining or doesn't go anywhere, I could just keep the stock and collect a dividend, which is very attractive. So I don't see a lot of risk with this company, but also there's a lot less upside. So that would be my second idea, part of this growth to value story, and buy a couple of shares of GlaxoSmithKline. So those are my two investment ideas for the month of March, either a financial, Deutsche Bank, or a potential value stock, JSK. And yeah, maybe looking back with the benefit of hindsight, when you watch this in a couple of years, what would you have done? Would you have rather bought a financial company or a healthcare company, which seems more reasonable now? I don't know. So what I want to do is introduce a random element into this whole thing. I will use a random number generator to decide for me, like a magic 8-ball. You shake it and it tells you what you're supposed to do. And then whatever the outcome of this is, I will just do it. All right, so it's a one-shot kind of idea. I will just randomly select one of those stocks, and then whatever the program tells me to do, that's what I'm going to do. Here I am on a website called easydecisionmaker.com, and I'm going to let it make the decision which company I should invest in for me. So my question here is, which company should I invest in? And the two options are A, Deutsche Bank, and B, GlaxoSmithKline. Ooh, okay. So let's see what I will do. I will click on answer, and whatever comes up, that's what I'm going to buy. Let's go. The answer is GlaxoSmithKline. Answer B. All right, okay. So that's the company I will invest in, the less risky of the two options. All right, so here I am back on my online trading account, and I will now put in my first trade for GSK. I suppose I can put in the order now, and then it will be executed on Monday when the markets open again. So let's see if I can do this. Let's click on trading and trade now. Right, let's type in the name of the company, GSK. Do I find that? Yes, here it is, GlaxoSmithKline. Okay. All right, here it is. Okay, I want to buy a certain number of shares. Let's see, how many shares can I actually afford? So I can put in a limit. Okay. So right now, the price is 1,296p. It's really strange that in the UK, you work with pence sterling when you buy a stock and not just with pound, but it's easy enough. So this is just divided by 100. So this is 12 pound. So I'm going to put in a limit here that is just slightly higher because I do want to buy this. So let's just say 1,300, but it will probably be cheaper than that. Well, like 12.96. And how many shares can I afford at a price of 13 pound? Let's just see. So I have 500 pounds available divided by 13. So I could buy maybe 37 shares. Right, so let's buy 37 of those. Duration, 1 day. Let's buy it tomorrow. Okay, that all looks good to me. Let's say preview order. Okay, here we go. I would buy tomorrow on Monday 37 shares of GlaxoSmithKline, which would cost me a total of £491.40, including a commission and a stamp duty. Interesting. Why a commission? I was under the impression that with Interactive Investor, I get one free trade a month. So I'm a bit surprised, but maybe it's because it's my first month. Okay, so I'm going to buy those 37 shares, I think, right? Right? Yes. All right, let's place the order. Place order. Here we go. Thank you. Your order has been received. There we go. Great. I'm now the proud owner of 37 shares of GlaxoSmithKline. My first investment. Fantastic. Feels good. Let's just hope it works out. And I also want to put Deutsche Bank on a watch list. Oh, here we go. So here's a watch list. Okay, so now I got Deutsche Bank in my watch list, and so I can see if maybe if I had invested in this, my idea would actually have worked out. We will see. And there you have it. I placed my first ever order on my new trading platform. All right, that's pretty much all for today. I successfully carried out my first ever trade on my new trading platform. Kind of happy about it. It was fun. I did some sort of research, not very professional, but at least some kind of strategy, some sort of outlook, which I think is important. And I ended up buying this company GlaxoSmithKline, which I'm quite happy with. I think they're solid, and hopefully it'll work out and they will actually go up in price, maybe in sort of my optimistic, positive outlook by as much as 20% by the end of June. And if that works out, then I might just sell the stock then and have a nice little profit. So now I just have to see how much money I can save in April for next month to buy company number 2 and carry out my second trade. And that's what I'll be talking about in my next vlog.